July 24th, 2014, current time 10:37 GMT. Jay Meisler here with the daily Forex trading outlook for the Eurodollar. Now, if you look at the price action overnight, you had the New Zealand dollar fell sharply on a more dovish central bank statement following another rate hike. You saw sterling fall on the disappointing data, and you saw the Eurodollar rise on better than expected flash PMIs. So you can see the market is hypersensitive to data. This goes across the board as the market is focusing on interest rate expectations. As far as the Eurodollar data goes, to me it's irrelevant because the ECB has already shot its load. It's not going to change policy no matter what data is. It looks like probably, unless the data really started to come in on the soft side and inflation started to, deflation pressure started to build until December. So we're talking about almost 5 months now that we are going to be on hold as it sees how its latest easing policies play out. So you can trade, your markets maybe react to Eurozone data, but you probably can fade it because it's not going to affect ECB policy. What happened overnight? So far, we've had an outside day. You would have to close above 134.74 for an outside day key reversal. Not one of my favorite indicators for the Forex market, but one that you have to pay attention to because some will pay attention to it. Otherwise, if you look at the euro, this is your daily chart here. We have a situation where, if you look closely, I pointed out targets yesterday at 134, the key one being 132.94. We came within the zone here, found support. We bounced back above the 50 level and then above the 75 level. We took out some small stops. On the upside, it looks like probably 134.90 to the figure is resistance right now. If you got above it, maybe you could squeeze a little higher. You got this trend line here that comes in at 135.85, so that's not in danger. But overall, the trend is still down. But what we've done here is we've taken out stops on the downside. There's really nothing to go for, and the Forex market does move on stops. So with little to go for, we are in consolidation. The euro got some support out of a bounce in euro sterling, and that's where we stand coming into today. U.S. calendar is relatively light. You have weekly jobless claims, you have new home sales, and the market PMI. Now, if you look at the 4-hour chart in the euro, key level here, and the one that keeps the momentum going, comes in at 135, to me 135.49, and that is not in danger at the moment. So it's right over here. So right now in consolidation mode, the breakout level was 134.90, and that's where I get, and we had a little pop high early in the week at 134.95. So we have 134.90 to 95, and I'm making it 90 to the figure is the resistance on top. We got into, I think, 134.84. Here it is 134.96 on the 1-hour chart. So you can see where the key levels are. If we squeezed higher, it's going to be a struggle. But I said 134.90 to figure, and I would use the 100 period moving average right now at 134.95 as initial resistance. So that really covers it all right now. We'll watch a little U.S. data. As far as article goes, we have one on cable, and if you plan to, for those who also trade sterling, if you plan to trade sterling or trade sterling, cable that is, you need this indicator. It's a really good one. We have one for the euro as well. I suggest you click on it, take a look. I'll post the euro. Matter of fact, I'm going to change that. If you plan to trade the Eurodollar, you must need this indicator. I will give you the indicator. Just click on this link, take a look. Otherwise, good luck and good trading. As I said, no stops to go on the downside, which could cause at least some consolidation, but you got to get above 134.90 to figure to squeeze it higher.